In 2023, the S&P 500 experienced wild swings as inflation surged to 3.7% and the Fed hiked rates to 5.5%. Global conflicts rattled markets, yet amidst this chaos lie strategies that transformed $10,000 into an astonishing $2.1 million over 50 years. These strategies have weathered the storms of Black Monday, the 2008 financial crisis, and even COVID-19. The shocking truth? A staggering 90% of investors overlook them. Today, we're diving into the 10 secrets that Wall Street doesn't want you to discover. From dollar-cost averaging to the power of compounding, these timeless principles can safeguard your investments and build wealth. Let's uncover these hidden gems that could change your financial future forever. Sarah invested $500 every month in the S&P 500, even through the chaos of 2022's 20% crash. While many were panicking, she stayed the course. By October 2023, her portfolio had grown by 18%. How did she do it? It's all about dollar-cost averaging. This strategy means investing a fixed amount regularly, regardless of market conditions. Data since 1973 shows it outperforms lump sum investing 70% of the time in volatile markets. It's like having a safety net that cushions the blows of market dips. So, while others were selling in fear, she was buying at a discount, setting myself up for long-term success. It's not about timing, it's about time in the market. Think about it, investing is a marathon, not a sprint. The longer you stay in, the more you can ride out the ups and downs. Now, let's talk strategy. There's a method out there that's proven to be 317% more profitable. Sounds enticing, right? But here's the catch, it requires a stomach of steel. You need to embrace volatility, not shy away from it. When the market dips, that's your cue to double down, not panic. It's about having the discipline to hold on when others are selling. So, are you ready to build that resilience and unlock your potential? The market rewards those who can endure the storm. What if I told you one dying industry is staging a 2024 comeback? We'll expose it in strategy number 5. First, meet the silent wealth killer. Reinvested dividends have been a powerhouse, driving 40% of the S&P 500's returns since 1980. Take Procter & Gamble, up an astonishing 65,000% since 1973, all thanks to dividends. In 2023, the average dividend stock yielded 4.2%, outpacing inflation. Yet, shockingly, 80% of millennials are overlooking this opportunity. And let's talk about tobacco stocks. Altria offered a staggering 9% dividend this year. But here's the dilemma, is it ethical to invest in companies that profit from products linked to health issues? It's a complex choice, balancing potential gains with moral considerations. In a world where dividends can be a game changer, are we missing out on a golden opportunity? Strategy number 7 reveals the dark side of high dividends. Next up, the strategy that's crushing AI. Tech may have dominated the headlines in 2023, but did you notice utilities quietly surged 15%? That's sector rotation at work. Since 1970, shifting into unloved sectors just 6 months before they peak has outperformed buy and hold strategies by a staggering 200%. Now, let's talk about the stealth play for 2024, water infrastructure. With global droughts skyrocketing demand, investments in this sector hit a whopping $1 trillion last year. But here's the ultimate rotation secret, it's not just about the numbers. It's about recognizing the trends before everyone else does. As the world grapples with water scarcity, those who invest wisely now could reap significant rewards. Keep your eyes on the flow, the future is in water. Buy before the crisis. And the next crisis? It's already here. Strategy number 9 has the answer. In 2020, cruise stocks collapsed 80%. By 2023, Carnival surged 300%. That's the Phoenix trade, by hated industries at peak fear. Airlines post 9/11? Up 400% in 5 years. But 2024's Phoenix play? Commercial real estate. Office vacancies hit 19% in 2023, but data shows REITs rebound 150% after crashes. But beware, one wrong pick could wipe you out. Which brings us to. Before we reveal strategy number 6, let's pause. If you're enjoying this, smash subscribe. Because coming up, the strategy that minted 65% of Warren Buffett's fortune, and the 2024 sector that could be your golden ticket. March 2023, Silicon Valley Bank collapses. Fear spikes. But contrarians bought regional bank ETFs up 30% by summer. Extreme fear equals opportunity. In 1987's crash, contrarians gained 40% in 12 months. But the ultimate contrarian play? Investing in nuclear energy post-Fukushima. Up 200% since 2012. Ready for the shocker? The next global crisis is already brewing, and strategy number 9 reveals where to hide. Yes, but you'll need strategy number 10. Next, the algorithm that outsmarted COVID. Quant funds using AI gained 24% in 2023 versus 18% for humans. The black box strategy? Follow insider selling. When CEOs dump stock, it's a red flag. Peloton's CEO sold $50 million before its 2022 crash. But the real shocker? AI predicts market crashes 6 months early. The Fed's model sees a 35% recession risk in 2024. How to prepare? In 2022, the S&P fell 20%, but defense stocks jumped 40%. The bunker play, profit from chaos. Since 1973, gold gained 12% annualized during crises. But 2024's bunker? Cybersecurity. Global attacks rose 125% in 2023, CrowdStrike surged 90%. But the ultimate hedge? It's not gold. It's not crypto. Strategy number 10 reveals the true panic asset. In 2008, the VIX Fear Index spiked to 80. Those who bought then gained 450% in 4 years. The panic button? Bet on fear itself. In 2023, the VIX hit 30 during the debt ceiling crisis, a 25% profit window. But the ultimate panic play? Shorting the market during euphoria. Nvidia's 2023 AI hype saw 250% gains, but insiders sold $600 million. Will you be the shark or the prey?